Everybody, Leo DeSell, I'm glad you're tuning in. This is Phil Schmitt with Schmitt Insurance, and today we're going to go over the ins and outs of homeowners insurance and flood insurance. So, Phil, why do we need homeowners insurance? What's the importance of it?
Well, for one thing, if you're getting a mortgage, your mortgage company is going to require you to have insurance on the home to protect themselves, also to protect you if something does happen.
What does it cover?
Well, the basic coverages on a homeowner's insurance is obviously the structure. That's usually coverage A on an insurance policy. Coverage B would be the other structures. That's basically any structure that is not attached by the roof line to the house. Coverage C would be your personal property. That's basically your stuff in the house. Okay. If you were to take your house, turn it upside down and shake it, anything that would fall out would be personal property. That's coverage C. Okay. Coverage D would be loss of use. So let's assume there's a fire in your house and you can't live there because your kitchen's burned up. Well, then your insurance company under coverage D, loss of use, pays you to live somewhere else while your home is being repaired.
That's important.
Yes. And then coverage E would be liability, personal liability for your premises. So if somebody's walking by, trips on a tree root and breaks their leg and tries to sue you, then your personal liability coverage would cover you for that.
Do you have to have all of those?
Well, all of them are basically standard with a good homeowner's insurance policy.
Got it.
So,
does the mortgage, that lender, require you to have those standards, everything, the liability, and?
They're worried about the rebuilding the house. Right. You know, that's what they're loaning money against. Yeah. They don't necessarily care if you get sued, but they want to insure the structure, which is where their money is tied up.
Because they really own that home until you pay it off.
Yes, in a way. Correct.
So the most common things that we see and find is roof issues. You know, it's wind, hail. I mean, those things, damage that roof dramatically. And so, if there's a bad hailstorm, and very first thing, it's covered by that, right? The homeowner's insurance.
Right. One of the things that the lenders always ask me is hail damage and wind damage included? That coverage, if that's included. And of course, we always include it in every policy that we write. That's one of the advantages of going with my company is you're going to get a good insurance policy if we do the shopping for you.
Yeah, so you sit down with that homeowner or that soon-to-be homeowner and you go over the ins and outs of what the coverage is and compare it to others. You go apples for apples on it, right? Right.
Well, typically after I get all the information needed to provide a quote, when I do my shopping, there's several different carriers that I use that are good A-rated carriers that I can do my shopping with. And sometimes in different areas, depending on the price range of the house and different factors, some carriers are a better fit for the buyer than others, depending on the age of the house sometimes, or if it's got a hip roof versus a gable roof, or if it's made out of wood, or if it's made out of stucco or brick. Those are all factors that determine the rates of each individual homeowner's policy. Yeah. So what carrier may be the best fit for you in your subdivision may not be the best fit for me in my subdivision.
And so for a newer construction, it's obviously cheaper, would you say?
Typically, newer construction houses are the most sought after by the insurance carrier, simply because everything is new. Right. There's less of a chance for something to go wrong in the house.
So it's all about risk. It's
all about rating the risk for them.
So Phil, what separates you from the big companies, the other brokers out there like yourself? What makes you different? And that's what.
Okay. Well, for one thing, I'm an independent insurance agent, which means I'm not tied to one carrier, one insurance carrier. A lot of the major carriers that take up a lot of the market share, those agents can only sell that one product. Whereas I can offer products from several different carriers. So for instance, if the major carrier policy doesn't fit you, if it doesn't work out to where it's a good price or good value for you, that's the only product that they can offer you. So they're going to try to fit you in, try to force you into that one product. Whereas if I have a company that doesn't fit you, well then I'm going to keep shopping until I find something that does offer you a good price and good value for what you're buying.
Oh, that's fantastic. So you do the work for the consumer. They don't have to go and shop 10 different companies. That's
right.
What you do. You
basically,
find the best
if you relate it to buying a car, hey, go get me the best deal possible on a good, solid car. That's what I do for homeowners insurance. I present you with a few different options that you can choose from. We talk about them, and then we select a carrier.
Similar to a buyer's agent.
That's right.
That's
right. That's very similar. Yeah.
So with years of experience in this industry, I've dealt with numerous agents in the insurance industry, and I'll tell you, I've had those phone calls before where I was naive. I didn't know what all entails on the insurance side, and we found that house that the buyer loves, and they bought it, and then they got a phone call from their insurance company a couple of weeks later, and they want to drop them because the roof is too old, or there's major cracks in the driveway, or they don't have railings on the front porch. And I'll tell you, they're not mad at the insurance company, they're mad at me.
Right.
I didn't know about that.
Yeah.
So
they're also mad at an agent too.
They're mad at their agent too, but then
right.
they have called some big company who they'll never hear from that person again. And so
right.
the difference that I find with you is that I've never had that happen. That's a big difference I find. So tell me, what do you do? Right.
Well, that's one thing that we've learned also. I was a captive agent at one time where I only had that one product, and they were pretty lenient. But when I became an independent agent, I found that virtually all the insurance carriers these days are inspecting the houses. So what happens is the buyer goes in, they find the house, they get a loan, they get an insurance policy, then they buy the house. Well, a few weeks later, an insurance inspector comes in from the insurance company, and they do their evaluation on the house.
Does this happen every home? Every time?
Virtually every home,
okay.
Correct. So they look for the age of the roof, the condition of the roof. They look for if trees are overhanging the house. They're looking for hazards that they don't like. And it's in the contract that they have the right to say, we don't want the policy. So on the front end, that's no good for anybody.
Right.
That doesn't make you look good, doesn't make me look good, doesn't make anybody look good. Even the mortgage company doesn't look good in that process. So what I do is I do a lot of the frontline underwriting myself. If I see on the appraisal that the roof might be a little old, or if I see some trees in the pictures, I'll look at the driveway, I'll look at a few different things that are common concerns with the insurance inspector. If it's close enough, I'll drive out there and look at the house myself.
Yeah, you're a local agent.
So we try to avoid that at all costs. And there's been some buyers who basically took our advice and didn't buy a house or renegotiated the price to where they could get these things fixed on the front end, based on them kind of proving to the seller that they're not going to be able to get insurance on the house. For instance, the seller may have bought a house with a 10-year-old roof, owned it for 10 years, never replaced the roof, and now all of a sudden he's trying to sell a house with a 20-year-old roof.
I'll tell you.
Not many insurance companies want a house that has a 20-year-old roof on it because they know a claim is coming or a replacement is coming, and they just don't want the bother.
I'll tell you, that's something with an experienced realtor. It's very important when you are showing homes to a buyer and they love this house, but you see on their property disclosure, you notice that roof is 20 plus years old,
right.
And it's a 3-tab roof where it's more of a flat. They're not overlaying like the architectural roofs are,
right.
Which lasts longer. So if I see an old 3-tab roof on there, I know right away that there's going to be an issue getting insurance. And so a lot of times I'll take a couple pictures, send them to Phil, he'll look at it and say, man, there's no way that roof is insurable.
Right.
And so at that point, we try to negotiate in our contracts with our buyers to get them a new roof. So if they buy the home, is there a time frame that a roof can be put on after the purchase?
Typically, the insurance company sends the inspector out and they provide the report to the insurance carrier. Mm-hmm. and they do their evaluation. And a lot of times the concerns are minor. They say, well, they want these trees trimmed back a little bit from the roof, just because the trees brush up against them could damage the single. So a simple prune job on the trees would suffice.
Okay.
Most of the time, the concerns are minor. And so that's a good thing because we can fix the concerns. They usually give you a 30-day, sometimes 45-day window to fix whatever the problem is.
Okay.
It's in very rare circumstances do they say, I don't care if you fix it or not, we still don't want it. Man, I've never had that happen to me because, like I said, we do frontline underwriting. We really look at the appraisal. If the appraisal doesn't show good pictures, we try to look at the inspection and really get a good idea, or even we'll drive out to the house ourselves and look at it to make sure that we're protecting the customer as well as ourselves. Because, again, it's no good for anybody if the insurance policy doesn't stick.
Got it. Hurricanes. It's been a crazy year.
Right.
You know, a lot of people have questions about this, and you know, you're the perfect guy to ask. So, tell me more about hurricane insurance, how the deductibles, what's all involved with it.
Right. Well, for realtors, hurricane season can be a touchy situation because they may have a closing lined up for, let's say, October 3rd. Well, if Mr. Hurricane starts entering the Gulf of Mexico, virtually all of the insurance carriers will put a moratorium on new policies being written.
So it's only for new policies?
It's only for new policies.
If they're binded prior to the named storm being in the Gulf, you're still good, right? They won't...
Correct,
right. Okay.
Correct. So basically, any policy that's renewing, you already have the policy, you're going to have the coverage.
Okay.
It's only for newly written policies. And so that's why we pay attention to, we work with the realtors. If we even see a hurricane getting close to the Caribbean, we start talking about it and say, when are your closings coming up? You know, what's going to happen? Can we get the policy bound? So once we have the policy bound, the hurricane can come in and the insurance company will be okay with that.
Okay.
They'll let the policy go into effect. It's only on the ones that haven't been bound yet. So if you have a closing on October 3rd and a hurricane enters the Gulf, say, you know, a week before, they're going to let that hurricane pass until they write the policy. Well, that might go past your closing date, which creates a problem for you and your buyers.
Yeah, I don't blame them.
Right. I mean, it's would you insure a house that's about to have a hurricane on it? So the other thing to talk about that's concerning hurricanes is your hurricane deductible on your insurance policy. That's the good thing about me being an independent agent is I can shop the market and find policies. If if that's a concern of yours, having a low hurricane deductible, we have insurance carriers that offer $1,000 deductibles or even a 1% deductible.
It'd be a flat.
Correct. They go anywhere basically from $1,000 to 5% of your coverage A, which is the insurance value of your house. So a lot of insurance companies, a lot of the mainstream companies require a minimum of a 2% hurricane deductible, which if you're buying a $500,000 house, that's a $10,000 hurricane deductible.
Right.
So basically they're taking themselves out of the roof business. If your roof blows off, that's almost, for a $500,000 house, that's probably about half the value of the roof. Right. So we can help lower that back end cost by getting, a lower hurricane deductible.
That's a great thing to know. It's a great idea because most people have no clue what that even entails.
Right. I remember you called me asking me what your hurricane deductible was.
Exactly. I had no idea.
We were in good shape.
Yeah, so I appreciate that.
Yep.
I think another major question most people have is flood insurance.
Right.
Okay. August 2016 was a terrible year for Baton Rouge when that all hit, and I forgot what the numbers were, but I know it was a very high number of people either did not have flood insurance or did not have content if they had flood. So, first of all, explain to us when a mortgage company requires you to have flood insurance. How does that work?
Right. Well, for one thing, basically every house in Louisiana is in a flood zone. Now, you have preferred zones, which the mortgage company doesn't require you to have flood insurance. That doesn't mean your house won't flood.
And that's X, right?
That's the X zone. So it's X500, either plain X or X500, meaning you're in the 500-year risk zone. So about 25% of the flood claims, this is coming from the statistics that FEMA puts out, about 25% of all flood claims come from houses that are in a preferred zone. So that just tells you that even though you're not in a flood zone, your house is still prone to flooding. Right. And we saw that in August of last year.
That's right. So what is the cost if you're in flood zone X, which is preferred, compared to A or AE, which is not?
Well, the X zone policies are called preferred zone policies. So they come in packages. They go from anywhere from $20,000 worth of coverage all the way up to $250,000 worth of coverage.
And that's max $250,000? You can't.
It's max for the basic flood insurance policy.
Okay.
And let's say if you have a $350,000 house and you buy a $250,000 flood insurance policy, there's no co-insurance penalty. Since it's the max policy, they still provided that replacement cost and don't have a co-insurance penalty if there ever is a claim. The $250,000 policy comes with $100,000 in contents coverage,
which is important.
It's important, and that price is $450.
Okay.
So that's basically, if you're in a preferred zone, that's the highest that you'll pay.
So $450 if you're in a great zone.
Right. So for instance, if the next lowest package is $200,000 with $80,000 in contents, and that price is $425. I do this so often I know those prices by heart.
Right.
So the A zones and the AE zones the price is all determined by your relationship to it's called the base flood elevation.
Okay.
That's the elevation level that is set by FEMA for your area.
Of your slab, right?
Well, the base flood for the area.
Okay, so
that's the base flood elevation. So that's kind of where they want the houses to be built in that area. So for instance, we just did an elevation certificate in Denham Springs, and the base flood elevation was 47.0.
Okay.
So if a house slab is built above 47.0 in that area, you're going to get a pretty good rate because the house is high.
Okay.
But what we're seeing is, especially in Livingston Parish, that a lot of the houses are built below base flood elevation. So the rates are going to be higher. So it all depends on your relationship to the base flood elevation in your area, where your slab sits.
So the lower you go, let's use 47 as an example, the higher you're going to pay for flood insurance.
Correct. Okay. So if your house is sitting at 45 feet, well, that means you're 2 feet below base flood elevation.
Right.
So you're going to pay a much higher rate than if somebody was sitting at 47 feet, which is equal to.
What is a way you can determine what your actual slab is?
Well, you would purchase an elevation certificate,
which is pretty cheap. We know. I mean, our usual
$200.
$200.
Right.
It could save you hundreds and even thousands of dollars.
It did. In fact, I just had a client this week that they purchased the elevation certificate, and they got a much better rate because their house was pretty close to the base flood elevation. They had an older house, which they didn't have to get an elevation certificate to be able to buy flood insurance. They could have done it under the pre-firm grandfathered rate.
You can get grandfathered into the...
If your house is of a certain age. So in Baton Rouge, if your house is built before 1979, most of the time you can get the pre-firm rate.
Okay.
Like in Livingston Parish, the firm date is 1981. So if your house is built before 1981, then you can get a pre-firm rate on your flood insurance.
So that means that the new owners can get grandfathered into the previous owner's policy?
Well, that's kind of a different grandfathering. I think FEMA's trying to do away with all the grandfathering. So
see, we've done that with clients in the past.
Right. So you're seeing that the pre-firm rates for flood insurance, let's say your house in Baton Rouge built in 1960, they offer you a certain rate. But buying an elevation certificate and rating it that way may provide you with a better rate.
Right.
That's the bottom line.
So
and the point is.
Is there any negative in getting one? So if you get one, do you have to report that elevation certificate?
No, you could always do the pre-firm rate or the rate that you're already paying under, if you have assumed the policy, which you were talking about from the previous seller.
Okay. Because I have a lot of clients, I'll tell you, right when we get a listing and they don't have an elevation certificate because they were grandfathered in or whatnot.
It's a couple $100.
Yes.
You're going to have it. Somebody at that property is going to have it eventually anyway.
Yeah.
Even if they do the pre-firm rate, the way the rates are going, those rates are going to keep rising and rising and rising.
Yeah.
FEMA's doing that on purpose so they don't have to subsidize those older houses anymore.
And I'm pretty sure this happened with my brother where I advised him, I said, look, get an elevation certificate on this home you're going to buy. Right now, the current owners are paying like $2,000 for flood insurance.
Right.
He did it. We submitted it to you, and you got it way cheaper for him,
right.
which saves him a lot of money. And when the previous owners saw that at the closing table, they're like, why didn't we do this years ago?
Right.
You know, that could have saved them a lot of money.
Flood insurance is a way that I differentiate myself and my agency from other agencies because it used to be that flood insurance is flood insurance. FEMA sets the rates and it is what it is. But with a little investigation and the more rates go up in the area, that makes it a profitable business for private insurers to come into the marketplace. So we've developed some relationships with some private insurance companies that are offering rates even on houses that have flooded or houses that are in a flood zone. So FEMA's actually getting some competition. And so our agency has some relationships with a few different private insurers that may offer better value for the customer and still satisfy all the loan requirements that the mortgage companies have.
That's really good to know.
Right.
Good. That's great info. I appreciate that.
Yep.
Phil, I want to talk about the whole bundling thing that you keep hearing advertised everywhere. I remember when I was younger, I had my auto, my home, everything all bundled with one. But when I came to you, you did something different. What did you do?
Right. Well, a lot of insurance carriers, more your mainstream carriers, offer or they advertise we can bundle your auto insurance and homeowners insurance together to save you money.
Right.
Well, that's a lot like the phone companies and the internet companies trying to bundle everything together. Sometimes it's a good deal. Sometimes bundling is just a marketing ploy to try to get all your business. Mm-hmm. So what I did with you was I looked at your declaration pages, did a review, reviewed your coverages, and then I shopped your auto insurance, I shopped your homeowner's insurance, and it turned out for you that being with the same carrier didn't make sense because you get better value splitting them up.
Right.
So sometimes it makes sense. Sometimes the carrier's a good fit on the homeowner's insurance and the auto insurance for the person, so where it does make sense to bundle, but sometimes it doesn't. In your case, you got a lot better value, saved over $1,000.
And more coverage.
And got more coverage because we even included an umbrella policy for you. And we went with 2 different carriers to cover 3 different policies.
Yeah, so it made sense. It ended up saving about $1,000
right. So
a year.
the benefit for you is you can call me.
Right.
You still have one person to call, and I handle the different carriers and the different policies.
Yeah.
And a lot of the carriers that I use, they'll have agency bundle discounts, so we can individually shop the policies and still kind of get a bundle discount because you have your business with the same agency. So that's one of the things that separates me from the mainstream carriers.
So cheaper price and more coverage. You can't beat that.
You gotta like it, huh?
I appreciate that.
Right.
Too. Thanks. Well, Phil, I appreciate your time. I really do. I appreciate you saving me money, and my clients' money, and it's proud to say that you're part of the Pennant Power team, and me and my clients definitely appreciate it.
Right, so, right. Well, I'm happy to be a part of your team. Your agents have been good to me. When I ask them questions, they promptly respond, and we get the policies written accurately and provide good value. So I think it's a win-win.
I appreciate that, and it's good to have 2 LSU jocks on the same team.
Yeah, that's right. You got it.